Hi, this is Brandon Christy from Christy Capital Management with our December 2014 Educational Economic Update. In this month's video, we'll discuss some of the economic events that occurred last month to give you some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. December was a fickle month for markets that forced investors to weigh positive domestic fundamentals against fresh worries from abroad. Let's take a look at what happened this last month. Falling oil prices caused a lot of market uncertainty as investors grappled with what low prices mean for the economy. Since recent highs in June, oil prices have fallen nearly 50%. While cheap oil and gasoline are great for American consumers who have more money in their wallets around the holidays, it's bad news for oil producers. Countries like Russia and Saudi Arabia depend on oil reserves to balance their budgets. American producers need higher oil prices to make oil projects economically feasible. If prices stay too low for too long, it could destabilize many petroleum-based economies and shut down some of the U.S. oil projects. Holiday shopping kicked off in November, and despite a rocky Black Friday weekend, retailers hope that cheap gas and improving labor market will boost sales. Sales between November and December are projected to grow 4.1%, which is the biggest increase since 2011. On the other hand, many stores offered large discounts to lure shoppers, which may cut into their profit margins. The Commerce Department released another revised estimate of GDP, showing the economy grew at a whopping 5% in the third quarter. This is the fastest rate of growth seen since 2003. Even better, the biggest revision was in personal consumption, which is the most important driver of overall economic growth. Now the question is, how much of that juice will be carried into future quarters? It's too soon to say for sure, but we hope that cheaper gas and a better job situation will boost the economy in the fourth quarter. Overall, 2014 was a good year for the U.S. economy. As the recovery moved into its fifth year, we finally regained all the jobs we lost in the recession, and Americans started believing in the economy again. Looking ahead, it's important to be cautious about markets in the coming weeks. Despite periods of volatility, markets did well in 2014, and a pullback is possible. Fundamentals are solid, and we expect positive consumer sentiment and an improving labor market to contribute to gains in 2015. On the other hand, significant uncertainty remains about how weakening global demand, low oil prices, and interest rate hikes will affect the U.S. economy. As always, we recommend focusing on your own investment strategies while allowing us to keep an eye on market conditions. I hope you've enjoyed watching our economic updates this year. We look forward to a very prosperous 2015 together. That's it for the December Educational Economic Update. If you have any questions or concerns, please give our office a call at the number below. Here are some upcoming events we'd like for you to know about. Retirement Benefits Institute will hold a webinar titled TSP, to Roth or Not to Roth. This informative webinar will be held Tuesday, January 13th at 10 a.m. Please see the link shown at the bottom of the screen for more information. Thank you for watching this December 2014 Educational Economic Update video. If you have any questions about what you've heard on this update or would like to discuss your personal financial situation, please give us a call at 866-331-7749.
While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision.